February 11th, 2026. Today in the market, we had a continuation of the reversal of momentum. On a daily chart, 4 market days ago, we had a tipping point in the momentum from selling now to buying. And this momentum has been continuing. We're about to break variance with that last bearish day. And we did break variance today on this market day right here. So let's get into the trades that I took today. First one was on Palantir. Why did I take this trade? Well, we open with the 30-minute momentum building downward. The 2-hour momentum is very strong in the downward direction. And then we get a volume confluence right here. What do you see? This volume bar is greater than the previous 3. And also it's a 2x3, meaning these 3 candles, this one is greater than the first one, and 2 minimum of these 3 candles is aligned with the trade. Red for shorts, green for longs, red for shorts. So here we are, selling off. The MACD on the 5-minute starts to taper down. That is the entry signal right there. Now, the stop loss is about right here, somewhere above that candle. Normally, you want to go somewhere above that candle. Then you sell the majority of your position at this first target, which is basically a 2-to-1. Basically a 2-to-1. A little bit more sometimes. And this never came back. This hit the second target, but kind of consolidated, and I ended up locking in profit right around here later on in the day. So that was trade number 1. Now let's go over the next trade, which is in Amazon. Amazon, right here. Why did I take this trade? We're breaking the previous lows. Our 30-minute and our 2-hour are going to the downside. And we have this little pop right here. See, this momentum's not going for the shorts. No shorts. Don't take shorts yet. Boom. We get a pop. We get a volume confluence. That is the entry signal. This ended up being a loss. The very next 2 candles were enough to hit the stop loss. And then a little bit later, look what happened right here. What do you see? What do you see right here? Do you know these 2 blue lines are not there for no reason? These blue lines represent pre-market lows and previous day lows. Isn't that interesting? The price comes down, hits these previous day lows, pre-market lows, consolidates, rejects, comes back up, hits it again and rejects. We're now rejecting away for the second time. We're on the right side of the momentum. Histogram bars are going down for shorts, not going against the trade, they're going down, and we have a volume confluence. That is the entry. This entry ended up being a wonderful trade right there. I messed this trade up by accidentally. I took profit at the correct time, so that's good. I got hit the profit target, but my runners, I cut my runners short accidentally by doing a limit order and not a stop loss order. So as soon as I put in that limit order, it just sold where it was. So that's unfortunate. I ruined that. I could have had all of this extra profit, but I lost it because of order management. The next trade was in Intel. This was interesting because I didn't even know that I missed the setup in the time when it was happening. So I don't know how that happened. Right here, why did I take this trade? Momentum on the 2-hour going up. Momentum on the 30-minute chart holding an upward momentum at this very current time. This purple line right here where this represents, we're going up. What happens? What do you see? Well, we get a 2x3 entry right here on this purple line. I entered on the yellow line, which was late, because I failed to recognize that this previous candle right here, where this orange line is, what do we see? A 2x3, 3 candles, volume bars, 3 volume bars. This volume bar greater than the first, and 2 out of 3 of them or more, minimum 2, are aligned with the trade. 2 green volume bar. Boom. What do you see here? You don't want to take longs yet. Why would we take longs? This is going not with the long direction, starting to stall. Boom. Now we're starting to go with the longs. We get a volume confluence. So that was the entry. I missed it. I entered at this candle here. Enter at the close of the candle. Put your stop loss slightly below. Sell the majority of your position at that 2-to-1. That was a win right there. We're going to go over to the next trade, which was in NASDAQ. NASDAQ was forming a wedge, though I didn't know yet because I took the trade right here. And this was an interesting circumstance because I would have hit the profit target had I had a tighter stop loss. So this candle happened. Why? Why did I take the trade on this candle specifically? We get a volume confluence, 2 by 3. We're on the right side of the momentum. We tick down, and our higher time frames, let me get this out of the way here so we can see the higher time frames and how they align. At this current point, higher time frames, 30-minute going down, strong in the down direction right here, 2-hour going down, we're aligned. Looks like this would have been a win, because look, the price action went down here, but it didn't hit the win. Look, watch what happens. Entered right here at the close of the candle, stop loss slightly above. That target was just barely out of reach. Barely. Had I put my stop loss, because this was a large candle, had I put my stop loss not above the candle, but had I put my stop loss at the edge of that candle, the top of it, then the profit target would have been hit and it would have been a win. So that's something I'm working on recently, which is looking at the data and the probability. When we have these large candles, is it worth it to put the stop loss above, or is it more worth it based on the data to just put the stop loss right at the edge instead of going past, right at the edge of that candle? Next trade of the day was in Tesla. Horrible trade right here. I made a big mistake. Why? Here's the trade I took, but the strategy came into effect right here. So I took a trade late to the party, extremely late to the party. So the very next candle hit the stop loss, obviously. Small loss, so that's good. Small candle, small loss. Of course, you want to be proportionate, though. You don't want to just say it's a small candle, so you're not going to make any money. But regardless, it's unfortunate. Look at this, 30-minute going down, 2-hour going down. What do you see right here? What do you see? A 2 by 3 on the right side of the momentum. That was the entry right there, which would have obviously led to a win. Enter at the close of the candle, stop loss slightly above, target was hit. So I failed in 2 ways so far today. One, I failed to see the earlier entry on Intel, and one, I failed to take this trade here, which was the first opportunity, and instead I took the second signal volume confluence opportunity, which you never want to do ever. You never want to do that. You always want to take the first opportunity that is presented to you. Next trade on the day was a NASDAQ. We got 2 more trades to go over. Next trade on the day was a NASDAQ. I saw the wedge forming. I didn't know the wedge was forming when I took my first trade. Obviously, it was too early. But by the time we get to this trade right here, this yellow bar, I knew that we were in a wedge. Because look. Just look. It's so obvious. We're consolidating. The ranges are getting tighter. I took this trade because what? We had a huge volume confluence. We were on the right side of the momentum. The 5-minute, or rather the 30-minute was aligned with the trade. We had crossed over on the 30-minute. Momentum on the 2 hours holding up. So we've got alignments going on there. I entered right here at this candle. Look, the 3 candles later, it's a 5-minute chart. And this is also a 5-minute chart, which I'm now going to hide because they're almost showing the same data now. The 5-minute regular hours and the 5-minute extended hours, you use both of them in the beginning of the market because they can often be showing different information, so you want to wait for them both to sync up because that is where you get a good edge. So right here, I enter at this candle, I put the stop loss, I believe right below, like around here, and look, the price almost hit it. Man, it got close. And then it reversed and hit target. Wonderful. Absolutely wonderful. One more trade. Last trade was in Palantir. This trade happened in the last 10 minutes of the day, and I only took it because the 30-minute was holding such strong momentum. And so by the time I saw this volume confluence right here, a 2 by 3, or on the right side of the momentum, the MACD has finally flipped to the upside, that tick right there. We get a 2 by 3 volume confluence in conjunction with that break of the momentum. Momentum going down, 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 down. We're not wanting to go down, we're wanting to go up. Going down, boom, tick up, volume confluence. That is the entry right there. Enter at the close of the candle. Stop loss slightly below. Profit target was hit. And that was all of the trades for today. I'll see you in the next one.